Welcome to TechNests, a prop trading automation company. If you've ever wanted to trade but felt stuck because you don't have a huge amount of money to start, then prop trading can offer great alternatives to build capital. This is exactly where prop trading can come in. Skilled and beginner traders. Friendly who can trade with simple rules and discipline. Idea is simple. Larger the trading capital, larger the profits. Prop firms let traders pay a relatively small fee to access a much larger account size to trade. Say, a $50,000 account may charge a evaluation fee or $200. Now, if you trade well, you can earn payouts based on your trade performance. Profits you created is yours. Prop firm pays you the payouts in a profit share basis, usually 80 to 90% of profits to you and say 10 to 20% as their portion. It's a win-win situation for both prop firms and traders. Just as an example, if a $100,000 account costs $200 to get funded, a 10% profit is $8,000 as your payout after prop firm's 20% cut. But here it gets interesting. If you lose, you usually lose the fee you paid, not have to worry about $100,000 account. So the opportunity is straightforward. Lower upfront cost, bigger upside potential, and a path to scale. As long as you can trade consistently. Then what's the catch? Rules. Prop firms have rules that keep traders disciplined, as it is their funds after all. Every firm is different, but the common rules look like this. Hit 10% profit target to pass in minimum of 6 days of trading. Do not lose more than, say, 5% of the total value of the account. It's called max drawdown. Don't exceed the max loss. They may set a daily loss limit. For losing accounts, you need to stop trading on that account for the day after a loss limit. Follow consistency rules religiously to avoid something called windfall trading. This determines if your profits are payable or not. Check for any financial events and prop firm rules around it. Some firms don't allow during the event time. And here's the key. These rules are not random restrictions. Under the hood, prop trading has clear structural underpinnings that must be respected to anchor the account for payout. Why TechNests exists? Most traders don't fail because they're lazy. They fail because they can't follow the same process every day, especially when they're juggling multiple accounts. TechNests exists to solve that. We built a system that turns prop trading into a daily routine you can actually repeat. Let us talk about the TechNests prop trade workflow. Dr. Markets is the planner of trade session. This is your trade analyzer. Price action, technical analysis, and probability algorithms. Typically the last 30 days, and 5 days, and in the last 24 hours, and overnight price movements. It calculates popular mutual average values, stochastic and probability-based advanced mathematics, and creates a session heat map of likely buy and sell zones for the day. For example, this morning window is a buy zone environment around these levels. Later, the sell zone becomes more important as a result of reversal. TradeRx is the execution engine. TradeRx takes Dr. Market's plan and turns it into specific instructions for each account. For example, let's say Account 1 only looks for buys in this zone during this time. Account 2 waits for a sell setup later. If nothing lines up, do nothing. JournalX is the feedback loop. JournalX reviews the plan every day versus what actually happened, step by step, and produces a report and feeds into tomorrow's planning process as a continuous improvement engine. PropTrader Pro is the manager for all evaluation and funded accounts. PropTrader Pro helps you run your strategy across accounts with consistency, without burnout or decision fatigue. This is what keeps you from repeating the same mistakes. And importantly, Dr. Markets learns prop firm rules for each account type and plan each account individually based on account balances and target Dr. Markets, TradeRx, and JournalX, reducing human errors and keeping the account aligned with the structural requirements needed for payout. The two-stage path to payouts. Stage 1. Evaluation. How to qualify for funding. Your job is to pass by trading small, trading clean, and respecting the rules. You're building a pipeline of accounts that graduate into funded status. Stage 2. Funded. Payout mode. Now the job changes. You trade slower and steadier to build consistency and reach payout thresholds without breaking drawdown or consistency rules. How to get started. Steps are very simple. Get a free NinjaTrader account and install NinjaTrader desktop on your computer. Choose any reliable prop firm that supports US futures trading. For example, top of my mind are Apex or Earn2 Trade. Subscribe to PropTrader Pro on TechNests. Set up your evaluation accounts inside NinjaTrader and confirm they appear correctly. Install and configure PropTrader Pro on your chart and select the correct accounts and strategy settings. Every morning, enable PropTrader Pro and let it run. Repeat same routine for at least 1 or 2 months and trade on all accounts daily. Monitor your trade in real time and analyze and review daily, weekly, and monthly results. Then iterate and repeat the monthly cycle. If you want to learn our mission, goals, and how to trade prop accounts for payouts in a systematic way, visit TechNests AI. So, what is this notional funding? Is it possible to trade with notional funds and create real dollars as payouts? Sounds too good to be true. Notional funding in prop trading is the paper account size a prop firm lets you trade with. Like $50,000, $100,000, or even $250,000, even though you didn't deposit that money. It's basically, you can trade as if you have this much capital, but it's not your cash sitting in the account. To access that notional funding, most prop firms start you with something called an evaluation phase by purchasing an evaluation account. Buy an evaluation account simply means you pay a fee to enter the prop firm's test phase. You're not buying the $50,000 itself. You're buying access to the evaluation program for that account size. Typical cost, about $50 to $200. Let me explain this with a simple example and how it all works together. You pay $50, $200 for one evaluation account. The firm gives you a $50,000 notional evaluation account, which can be configured in NinjaTrader and trade as it has $50,000. Typical prop firm rules look like, make a profit of 5% of $50,000, which is $2,500. But you need to achieve it before you lose, say, $2,000. This is called a valuation challenge. They may also set your daily loss limit and set a minimum trading days to trade, to show consistency. If you trade well and pass, you move into the firm's funded stage. In this phase, all profits on funded accounts can translate into payouts in real dollars if you had followed all the trading and payout rules are followed. Well, if you trade poorly and hit a loss limit while trying to hit your target, you usually just lose the account access, but not the real $50,000 in cash, typically lose the evaluation fee, and the account is closed, reset. Why notional funding matters? Notional funding is like a borrowed scale for trading performance. Your cost is the evaluation fee, and your upside is payouts, based on your performance. Let's talk about the props first. Prop trading has some big advantages, but it also comes with trade-offs. Low upfront cost and trade with large notional account for a relatively small fee. Bigger upside potential. You can earn payouts based on performance without needing a large personal bankroll. Difference between personal money and prop account is that 10% of personal money of, say, $2,000 is $200. But in the prop trading world, same $2,000 can get, say, $1 million in notional funds now. 10% of $1 million, which is $10,000. Now this is serious and life-changing amount for most people, even if it is only a few months of the year. Good training ground for process. Because rules are strict, traders often learn consistency and routine faster. Cons of prop trading? Rules can be unforgiving. Trailing drawdowns, daily loss limits, minimum trading days, trading hours, trading style, and consistency rules can end accounts quickly. Even if the strategy is excellent, ongoing fees add up. Evaluation fees, subscriptions, resets, VPS costs can become expensive if you churn accounts without discipline. Payout restrictions vary. Some firms require buffers, minimum days, caps, and waiting periods before withdrawals. Scaling adds complexity. If you have multiple evaluation and funded accounts, that means more operational risk, mistakes, missizing, rule slip-ups. Prop firms' risk of non-payments is another issue. You rely on the prop firm's stability and payout reliability. Do a thorough research before zeroing on a prop firm. Psych pressure is high, especially for evaluation accounts, since they renew every month full price. If you do not meet the targets and drawdowns can push traders into overtrading or saving the account. Bottom line, prop trading works best when you treat it like a process, slow, steady, and consistent. Visit TechNests.ai today and download Prop Trading Pro Starter Pack for free and start learning while trading. Happy trading!